following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Brent in Martinez, California. Hey, Brent, what's going on?
How you doing today, Tom?
I'm doing great, man. You having a good day out there?
I am, thank you. I was really just commenting on the fact that I'm really enjoying the new format with you being there when the market's still open. You've assembled a great group of people. They're all great technicians. I'm just so glad that I first caught you on the radio with your little tiger growl. I'm like, who is this guy? And it got my attention, and it's really made a positive change in my life.
You're awesome, man. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great week, folks. Hope is a renewable option. If you run out of it at the end of the day, guess what? You get to start all over again in the morning. How cool is that? Market-wise, let's take a look at it out here. We have the Dow Industrials down 10, NASDAQ off 40, S&P's down 5, gold contract down $2.30, trading at $1,268 an ounce. Silver down 4 pennies at $15.65 an ounce. Platinum up 20 bucks. $9.98 an ounce. Copper flat at $2.27 a pound. Light sweet crude up $2 at $37.90. Bonds, the 10-year note down 6 ticks, 128.29. 30-year bond flat at 162.09. And good old King Dollar. King Dollar can't handle higher price once again, down 253, trading out at 97.09. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Oh, man, this market's deviant, and it's getting a little bit tricky here, folks, and this is what it is. So what we did on Friday is this. Friday, we get to a price point on the SPY, 201.35. Now, your benchmark, the first benchmark that I was looking at was the 199.83. That's the low that was generated on December 18th. That being said, guess what? I suspect we're going to go after that gap, which is 203.87. Bottom line, what do you have out here today? Well, you get a slight pullback, and you're pulling back with lighter volume. What is that setting up? That's setting up this run's not over yet. It's deviant, and it is getting tricky. What I mean specifically by getting tricky, it's like, okay, the market is real close. It looks to me like it's real close to giving it up. That being said, I don't expect it to. Why? Because when I do go over to the Qs, now the Qs are the weakest out here today, but guess what? The Qs are pulling back with dramatically lighter volume. On Friday, we went topside. We got topside with 31 million. What you have right now is that we're pulling back with 20 million, and you're pulling back into a sign of strength that had 37 million from March 1st. So that's telling me that, guess what? The Qs still want higher price, which totally makes sense, by the way, because the correlation inside the S&P, the SPY, your benchmark is December 18th, the low swing low there, and the Qs, that's 109.83. So I expect, bottom line, we're going to have higher price continue. And we're still in a counter trend bounce. That's the biggest number. That's why I mean getting tricky, because flipping from the long position to the short position is going to be a trip. Gold contract refuses to go down. Bottom line, wide price spread out here today. We went from 1257 to 1274. You're at 1268. You've done 200,000 contracts. Gold is pushing highs and pushing highs with volume. 10-year note. What do we have with the 10-year note? It's been shaking around here from 128.26 to 129.07 today. Bottom line is that what you do have is that you have lower price. What you don't have, though, is a pickup in volume. In order for bonds to get to much lower price, you're going to have to have a pickup in volume. What we have had thus far out here is we've done 784,000 contracts. We did 1.5 million on Friday. So that's going to need a lot more contracts in order to sustain lower price. We go and we take a look at the DX. We take a look at the dollar index, and the dollar index, bottom line, can't handle higher price. Dollar traded as high as 97.70 today. We're at 97.09 right now. You came down on Friday with big volume. You're going against that low right now. What I expect you're going to see is the dollar index wants to run into the lower part of the consolidation that it's trading in. The first lower part of this gets you down to the 95.28. What I expect you're going to see, though, is that you're actually going to run down to the 93 level from the August 24th swing low. And just as I'm talking there, you're talking about a nice little bounce. You got to love this market. Let's go to Jim in God's country in South Boston, Massachusetts. Jim, what's going on?
How you doing, Tommy?
I'm doing great. Yourself?
Good, good.
Go.
You remember me, the old Tech Tiger.
I totally remember. Not only remember you, you know what's so cool is that I'm flying up there. I can't wait. Like, it's 3 weeks from this weekend, I think. All the O'Briens, we get a big reunion in South Boston. That's going to be fun, man. So I'm gonna be up there pretty soon.
I live across the street from your cousin.
I'm sorry?
McSorley. I lived across the street from the McSorleys before.
Exactly. Right. How cool is that? I know. I love it. I love it, man.
I know. It's wild. Yeah, so I got the gold report. I got the market insights and the thing that helps me sleep at night. I'm in the Tiger Real Estate Fund.
Thank you so much, man. That you are too. That's wild. Thank you, man. I appreciate it.
I'm in them all. So I'm in the UCO, and I got like a 30% profit, and wanted to see where it's going. If it was going to go up to that swing point at the 14, near close to 14.
Yeah, let's take a look at the UCO, folks. Okay, is the U.S. Oil Gas Fund. Okay, if we go right over and first I'll just go right into the contract value. Oil is up 5.25% out here today. You had 218,000 contracts traded, which is a monster, by the way. Yeah, I mean, it looks to me that oil is going to go up to 41.35, and it's real possible, Jim, that we'll get up to 44.08. So,
oh, great.
Yeah, there's real action here, man. And in fact, okay, if I take 37, so if this took a swing point out today, folks, and just took it apart, and which, if you're a bull, that's a beautiful thing. So you get 37.52 was that high. 29. Oh man, that's big. That's $6. That's 43. Yeah, I'd stay right there. Now let me go over to USO for a second. USO. Okay, so we take a look at USO. USO. It's done 57 million shares. That's taking the swing point out too. Yeah, you get action, man. It's, you know, we just took out the swing point with 57 million shares versus 47 million shares. And bottom line is that you got 1142 coming into this, man.
Oh, wonderful. Hey, Tommy, I got our Valley, and we're still holding on to that, huh?
I know. Okay, here, let's look at this. Stay right there, because this is pretty intense. And yeah, it's still pushing. Stay right there, though, all right?
I will.
Our phone number is 877-927-6648. Right now, you got the Dow up 20. NASDAQ is down 28. S&Ps are down $1.50. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is up 30. You get the NASDAQ down 25. S&P's flat. We're talking with Jim from South Boston. We're talking about Valley, V-A-L-E, folks. Okay, we happen to own this in the gold report, and this has been an extraordinary run, no doubt. You know, I would keep it, Jim. That's the bottom line. And I know.
Well, I listened to the gold report, so. I mean,
you know, this is a tough one, man, because like we're up almost 100% or up 100%, and that's only in a week and a half.
We were at one point, yeah.
So the reason is this, okay? When we take a look at this in the weekly, you know, this is a monster sign of strength. It went from 280 to 487 last week. You have a high volume swing out here from 760 to 914, so it's like, you know what, man? And last night, you know what's so weird, folks, okay, is that this actually ran before iron ore ran. Iron ore went up 19% last night, which is unheard of. That's never happened. Now, it's at $63 a ton. So what that means is this. If you get a picture of something. If you've ever seen iron ore being dug, it's just like being down Carson Beach or the lagoon in South Boston. You just take a scoop, you take it out of the sand, and that's iron ore. So I'd stay there, man. I'd stay there because it's right, pushing with volume today, too.
I got a quick one for you.
Huh?
Yeah. USLV. I was in it, and I got out at 14, and I was wondering if you think it's going to pull back and fill the gap around, what is it, 1270 or something?
So the USLV, folks, is the Velocity shares 3 times long silver ETN. And, yeah, I'm glad you're out of it. Yeah. So there's some silver, you know, the silver equities seem to be doing all right, but silver itself still needs a lot of, you know, volume, it needs price, it needs all of the above. Yeah, I mean, 1281, right in there. Where I'm going there is that's the high of the 22nd.
Yeah, I see it.
Yeah, right in there. It'd be nice if it's in there with light volume. Okay, man, and listen, thanks so much for all the support. Really appreciate it.
Yeah, you're welcome. Thank you, Tom.
Thanks. Let's go to Frank in Gloucester. Hey, Frank, what's going on?
Hey, Tommy, how are you?
Hey, happy birthday, man.
Well, thank you.
Do you have a good one?
Appreciate it. Yeah, not bad, not bad.
That's awesome, man.
Yeah. Hey, I need a target for Heckler that I'm in.
Okay, so let's take a look at Heckler. Heckler is also pushing with volume. So, you know, these equities, folks, have made an extraordinary run. But guess what? They want to go further, man. I mean, if we take Heckler, we put this on a weekly, what you're going to see is that when we come into the swing point of October 16th, that was $2.64. You had 38 million shares. We pushed into it last week with 40 million. And today you already have, we're at 8.9 right now. So what that sets up is that sets up
something over $3.
Yeah, it's the next leg here. That's 335. Let me bring this back a little bit further. I'm trying to figure out what trend line it broke here. 1 second.
Okay.
So if we take this, okay, so it broke that. Yeah, it's 350. Let me put this on a monthly for a second.
Wow.
1 second. So if we get a monthly, oh yeah, there she is, right there. Yeah, 354, man. So you put this on a monthly. This is, folks, what's kind of cool. When you go from dailies to weeklies to monthlies, when you actually see that trend lines are broken, you want to bring them into larger time frames so you can really kind of get a clearer picture of what's happening. And that did it on that one, because what we did is that we went into the trend of the channel, top of the channel last week with monster volume. Well, we just jumped the whole channel this week, you know.
You're looking at a channel line that starts back in 2012 or what?
No, what I did, Frank, is that if you look at January 30th of 2015 on a monthly chart, I just took it from the top of that.
Oh, okay.
And what happens, folks, with any type of channel line, it has to hit 3 price points, okay? And this one's really cool. And the more price points you hit, the better off you are when it break. This has hit 6 price points, 7 price points.
Yeah.
So that's a true break, man, you know?
Yeah.
You might build a little bit cause in between it, but this thing wants to go. And what has happened is this, is that the run, yes, has been extraordinary, but guess what? There's plenty of people that still don't believe the run, which is perfect. Yeah. And then on top of that, folks, if you didn't hear it, what's amazing is that BlackRock, okay? BlackRock and Larry Fink is the guy that was yapping about pro shares and direction shares and leverage positions, right? Well, guess what? BlackRock didn't do a filing for the IAU, which is the iShares Gold Trust, and they ran out of shares last week. Huh. That's like a scandal extraordinaire that basically got reported, but they scrambled and they could issue shares out here today. But that being said, that is the amount of heavy buying that has been done inside the gold market. So
it's going on.
It's going on, man.
All right, bud. I'll hold on and let her buck.
Let it run. Have a great one,
right,
man.
Thanks.
Have a safe one. Let's go to Andy in New York. Hey, Andy, what's going on?
Fine, good. How are you?
I'm doing great, man. Thanks for calling. Thanks for holding.
So I'm looking at Apple.
Okay.
And I bought it at 98. Should I hold it or should I?
Yeah, I'd hold it right here. I'd hold it. What you have with Apple, okay, I suspect, you're right, you're at 101.58, $101.58. So this can make a run to 105.81 real easy. Apple also went up on volume on Friday. Apple had 46 million shares. You're backing down now at 29 million, so we'll probably do, let me see. Yeah, it's 24 minutes into the hour. You'll probably do about 35 million. That's what you like to see. It's backing down with lighter volume. So that looks to me like it wants to make a run to the low of December 18th. And December 18th is kind of intriguing because that's the benchmark in the S&P, which we already hit. We haven't hit that in the NASDAQ yet. Today, Apple, that's the benchmark in the Apple. And what brought the NDX 100, folks, went down fast and furious, okay? That was all about Facebook. Facebook got hit, and someone was selling Facebook, and it went down pretty quickly. That took the NQs down 50 points. It looks like they're going to run them right back up on the other side coming into the close here. But I'd stay right there, Andy.
Okay, good. Thanks a lot.
Okay, man. Have a great one. Have a safe one.
Okay.
And yeah, the deviance in the marketplace, folks, is a beautiful thing. But that's what you have happening out here. This is a market that does want higher price, and I expect the flip is going to be there. And this flip's going to be pretty amazing because of the way that the market has acted. There's going to be plenty of people that are bullish beyond belief. That's what markets do each and every time. So if we go over to the NQs for a second, we take a look at them, what you're going to see, I put this up on a 10-minute bar. What you're going to see is that you had breakdown. We broke down to 42.68. Well, guess what? As soon as we go back inside 42.88, which we did in the last 10-minute bar, this thing's gonna run, man. This is gonna be crazy. This thing can run to, well, 43.06. It doesn't have to run to the top, but 43.06 looks like it's gonna be game. There's plenty of time left to flip this whole thing around, because when you do break out a bottom like that, well, that would make sense that people will sell into it, and guess what? When it flips around, it's a false break downtown. You get a false break downtown, and guess what? The charge is the other way. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow is up 51. Nasdaq's down 17. S&Ps are up $1.50. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow Industrials up 50, Nasdaq's down 18, S&Ps are up $1.50. If we go inside the indices and we take a look at where the strength is versus the weakness, inside the Dow Industrials, CVX is the winner out here today. Chevron, that's up 244. You get Caterpillar. Whoops, there we go. Caterpillar is the second leader. That's up 187. ExxonMobil's up 183, and DuPont is up 120. Taken away from it on the way down, Nike is down 219. You get Visa off $2. You get Microsoft down 120, and Apple is down 155. Inside the NDX 100, the leader versus the laggard. Leader out here is, what's that, Endo Pharmaceutical? Endo International, that's up $2. You get Whole Foods up 126. Net Appliances up 98 cents, and you have Symantec up 54. Taken away from it on the way down, Netflix. Netflix is down 571. We have Expedia down $3. Ultra Salon is off 473, and Micron Tech is down 30 cents. Inside the XAU, the HUI, what do we have out here? The XAU out here is up $1.83. You're at $68.52. Now, it's pretty amazing looking at these XAU and the HUI because they are high, but guess what? They want to go a lot higher. The volume's behind the move, the whole ball of wax. I figure, the XAUs were laying out there at the 68 level. That thing wants to run up to the 83 level. Big numbers. We go to the HUI. You take a look at the HUI. We have with the HUI. That's laying out there at $176.58. Has the volume, has all of the above. Guess what? That baby is laying out there. That wants to get up into 246. So that is one monster number. There's no two ways about that. If we do go over and we take a look at the some of the higher volume stocks in this market out here, let's see, what you're going to see is that this is a low volume pullback today. I mean, that's the take why I suspect we're going much higher. And in fact, what's going on intraday now is that it's rejecting price intraday. So if we take a look at the higher volume stocks today in the marketplace, you have Bank of America down 9 cents. Chesapeake Energy's up 23. Freeport McMoran is flat. Let's go into some of the Dow stocks. Take a look at the Dow stocks. What you have inside the Dow stocks is that the Boeing is up $2. You get ExxonMobil up 194. We get DuPont up 125. Procter & Gamble is down 25 cents. You get, let's see, Amazon is, look at Amazon. Let's go with Amazon. Amazon's down $12. Let's see if this is getting any juice. Oh, look at that's rejecting lower price too, though. So Amazon's down $12. It traded as low as $5.55. It's trading right now at $5.62. Let's see, 4.2 million. You go in at the 5. That's not bad. Not great, but not bad. Amazon still wants, higher price too. Amazon looks like it wants to run into the price point of the $5.97. Let's go over to the NQs once again. We take a look at the NQs. What you're going to see, just as we were talking, you got a little surge inside the NQs. We just got to a price point. Let me see this. Okay, so we just got to a price point here of 4,300, and right now you're at 42.97, and you get 4 minutes into it. It's going to need more juice than that. We've done contract volume at 2,700 thus far. You're going into, that's going to be enough. We're going into 54. So you get 4 minutes into it. That's not bad. It's not bad. I suspect you're going to get a little bit more of a surge as we get up into and over the 42.99. Yeah, we're laying right at this number right now. You get a surge over it. Some operator's going to whack this thing over it. The Bulls and Bears will fight over it. That's for sure. Let's go over to the E-minis because the correlation. I like looking at both of these because when you look at both of them, you can kind of get a gauge. When these things go, folks, they go together, and one beats one. Within minutes. So the E-mini right now. That just went into 1998. You got to remember when I started the program, this thing was down at 1992. Not that it's not a huge surge, but it's a surge, that's for sure. The volume is behind the move. It's going into 21,000 contracts, and it's done 18,700, and it's 5 minutes. This will build some cause here to try to basically get up and over the 1999 area. This is really wild, man. I'm telling you. The volatility is not only out here. You got for a market today that hasn't moved much. This is quite a move coming into the close. You know, this is just a total flip around of I suspect what people would think on a Monday when you come into the market, particularly of how we came down. When we just came down, folks. And the NQs, those NQs came down. They were fast and furious on the way down. There's no two ways about that. You go over and we take a look at the. Yeah, she's trying to get up and over this right now. So the NQs have been down. They were down $40, $45. Right now, you're only down 20. If we go to take a look at just the 3 Qs themselves, what you're going to see is that you got back inside the range. The range we're talking about is 104.71. You got inside the range. Now you just jumped over the next range, and so that sets up 105.17. You know, if we get inside 105.15 and you're right next to it, this thing will blast right up to the very top, which will be a mind blower. And what that's about, folks, is that that's about the context of a false breakdown. When you get a false breakdown and you flip around the other side, it's fast and furious, particularly when you're coming into a market close. Because any trader, you know, that was a true breakdown. Okay, so when under the consolidation lows, it had some good juice with it. People would sell it. Guess what? Decides to flip around. When that flips around, people that have been in this market for a while might stay in. Others are going to flip the position around and go the other way. But once you get the momentum going the other way on a false breakdown, guess what? You're going to go, and you're going to go fast and furious. And a lot of that has to do with the shots going long, flipping it, the longs going long, and then getting the market going. And if you get the market going like it just happened in the last half hour of the marketplace, your probability gets a lot better that it is going to finish out the market flat. Now let's go over and take a look at the bond market. What's intriguing here about bonds today is this. Now, bonds have light volume. They're going to need heavier volume for lower price. That being said, the 10-year note has not been able to catch bid all day long. What that is saying to me is that it very well is possible that the next downdraft will have to do with rates creeping higher once again. This is Tom O'Brien. This is TFNN. You stay right there, folks. We come right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We have the Dow up 63, Nasdaq's down 9, S&Ps are up 350. And we go over and we take a look at the 30-year bond, what we have with the 30-year, folks. 30 years is a flat out here today. Now, the 30-year came into lows out here today and did reject the low that was established out here on Friday. That low was 161.20. On Friday you had 297,000 contracts. Today, what do? We do 157,000. You got to 161.22. So this is going to be intriguing looking at this. Going over to the 10-year, we take a look at the 10-year, and the 10-year continues lower, but the volume is dramatically lighter. Now, what it looks to me at this particular point, when you can't hold price and you do have dramatically lighter volume, it's going to be like, okay, most of the time you're going to flip right around and go higher. That being said, the way that the 10-year and the 30-year have been trading out here today, I was looking and I said, okay, so it's very unusual. Earlier today, folks, okay, we were up pretty good. The Dow was up, the S&Ps were up, NASDAQ was up. And the bonds still couldn't catch a bid. And it's like I'm almost saying, like, okay, so is the next leg down in the marketplace going to be the aspect that the market's going down, bonds are going down, and the interest rate structure is what's going to take them down? It's a tough call at this particular point, but that is one of the things we're going to be watching really closely, because the King dollar still can't catch a bid. And with King dollar not being able to catch a bid, you think that if rates are going up, that we should be able to get King dollar stronger. But guess what? It's not. It's bottom line. The bonds have been down, King dollar's been down, market's been up on a counter trend bounce. If we go overseas and we take a look at overseas, bottom line, overseas also still looks like it wants higher price. You had the FTSE today close sideways, down 17 bucks at 61.82. But guess what? FTSE looks to me like it wants to run up to the 63.14, which is the swing high from December 29th. If we go to the DAX in Germany, we take a look at the DAX in Germany. What you're going to see the DAX in Germany, that pulled back 45 points. And that, I won't get the volume on this I don't get the volume on this one until about 8 o'clock tonight. So we'll see how that shakes out. But I suspect, just as our markets basically have pulled down slightly, that, I suspect, is also a pullback on lighter volume. If we go over and we take a look at the XLE, which, of course, energy took off topside once again. The XLE is up $1.24. That is coming into a swing point, 62.29. Yes, look at that, 30 million versus 30 million. So this XLE still wants higher price, man. CVX, we go look at CVX. CVX is going into a swing point today. It's up $2.49. It's done 10.6 million. It's going at the 10.3. That's going to be higher price. You go to ExxonMobil. You take a look at ExxonMobil. Exxon's up $1.87. Oh, so this gets interesting. This is an ABC up. So check this out. ExxonMobil, I'll go back to Chevron again for a second, but ExxonMobil's an ABC up too. Your A point on this is $73.55. Your B's 83.44. Not bad. So you're talking $10. Yeah, it's a $10 ABC. That gives you 89. And 89, that's what's sticking out like a sore thumb. Oh, it's going to be cool. So the swing point that we were going for anyway is November 3rd. The high of that is 87.43. That puts the A to B equals C to D on Exxon's $89. You know, you start putting that together with where the market is. This market wants higher price. And somehow you got to basically keep the harmony going. And as oil finishes that ABC up, maybe that's where, you know, the market dies on the vine, and that's where, you know, something's got to come out of somewhere, or nowhere, rather. Because that's what happens with downdrafts in the marketplace, folks. Most time, things come out of nowhere to bring this thing lower. Because watch this. If we still go over to the SPY, when we take the bottom that was established on February 11th and go up, we had decent volume. It wasn't bad. And we did take the swing point out from February 22nd with volume. That being said, this leg up is dramatically lighter on volume than the leg down that was established out here from the 29th of December going down to January 20th. You know, so what is still game? Well, what's still game is at least a test of the January 20th low, which is 181. And, you know, we'll see if something is bigger is on the horizon. And I do expect, you know, that this is a classic of building cause for lower price. You know, if you take a look at these channel lines that are set up going all the way back to October of 2014, this has been building big cause. You know, this is not a phenomenon that, you know, has just happened. Your first get-go downtown in the marketplace was the August 20th get-go. Your second one was the January 1st get-go, and we'll find out how it continues to test the highs before we get another downdraft. When you take a look at this, though, we're coming into, on a monthly, you're coming into 865 million, as well as 1.6 billion, and on the monthly, we've done 595 million. So you can see 595 million versus that 895. That's distribution, you know, at the highs. But guess what? It's a trader's paradise, because those trends that we're in right now, they are long. They are long and they are big. There's no doubt about that. Let's go over and we take a look at, let's see if natural gas has finally done anything. So natural gas is up 0.7%. You're trading out, let's see, still hasn't done a thing. Oh, no, it's not bad. Okay, so here we go. No, natural gas actually did something. Let's see, the low Friday was 173.5. You got 173.1, but you come off this with some strength today. Well, if natural gas gets another sign of strength like it did tomorrow, then you might have something. We'll go look at UNG, which is the ETF for natural gas. That's trading at 606. Yeah, and that's got juice too. So that's good. Yeah, natural gas might finally, you know, basically find a low. That's how this is set up at this particular point. A few of the other commodities out here. You have, let's see, gasoline is up 0.4%. Natural gas 0.7. Cotton is up 0.4. Wheat's up 0.3. Not of corn's up 0.2. You got gold down 0.2. Silver's off 0.2. The big move out here, no doubt, overnight had to do with the iron ore folks, and iron ore was up 19%, which is just a total mind blower. That's put juice under, of course, the iron ore stocks and the steel stocks. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials right now up 48. NASDAQ is down 12. S&Ps are up $1.50. We're going to break back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is up 45. Nasdaq's down 14. S&Ps are up $1.50. And, you know, folks, if you are in some of these gold equities and silver equities, last Friday, what you had is this, is that many of them got over their high. They took out a B point of an ABC structure on the way up. A few of them have already finished their ABC structure on the way up. Many of them, however, had taken out an additional B point of an ABC structure on the way up. Then they gave it up on price. That is a complex ABC structure on the way up. And specifically what a complex ABC is this, is that I was talking about one going up. They work the same whether it's up or down, but the one going up goes like this. It takes a B point out of an ABC of an A to B point. It does it with volume. Then it gives it up on price. What normally happens is that you pull back under the B point, you go to the lower end of the consolidation, you do that with lighter volume, and as long as it does it with lighter volume, guess what? The baby turns around again, goes after the B point again, and goes after the full price projection. That's what a few of these, a lot of them actually did. So if you're in one of those, you know, basically just keep your eye on it. But what I do expect you're going to see is that continuation is going to move, and they're deviant beyond belief. Bottom line is that technically the setup is really cool. Fundamentally, it's the things are on fire. Fundamentally, what ends up happening, folks, is that the move's been so fast. That's why some of these have gone up so dramatically, because what ends up happening, of course, that if you go over and we take a look at this gold contract, you got to remember something. The way that gold companies get paid is that it's a 30-day rolling number that is averaged out, that's how they get paid. So picture if you own a gold company. Well, what you have here is this, is that the January 14th, gold was only at 1071. So you had the initial run from January 14th. Let's just bring it up to February 9th, right? Bottom line there, well, actually, let's see. The 14th, no, bring it to 14th to the 11th. So that first run, you're going to average out 1,071 up to 1263. Well, the next run, folks, the next run, yeah, you're talking 1263, let's say 1,200 to 1,260. That's a monster number when you just look back 2 months ago. 2 months ago, the averages were running out at 1,050. Now your 30-day moving average on what the gold company is going to get paid are running at about 1,250. That puts monster numbers to the bottom line like ASAP. And that's what's so exciting when things are going up versus going down inside the commodity market. When they're going down, it's vicious. The other way, forget it. What has happened, and this was a big number, is that BlackRock ran out of shares. Okay, so I had brought this up earlier, but the IAG, that's IAU rather. One second, IAU. I am gold. The IAU, which is the iShares ETF. Bottom line, they didn't file in order to issue more shares. And they got caught, basically on the wrong, it wouldn't be on the wrong side of the market. What could have happened here, though, which could have been a real problem, was that the net asset value, it could have traded not at the net asset value. And, I don't think that would actually happen. And the main reason is that Fink, who's the largest mover of money out here, he had to go out and buy, period, because the scandal would be amazing. You stay right there, folks. We'll be coming back with some numbers for you. Dow right now is up 44. Nasdaq's down 15. S&Ps are up 2. We're going to be right back.
You know what? The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night and a great week, folks. Surround yourself with people who believe you can. Market-wise, let's take a look at it out here. We had the Dow Industrials up 67, Nasdaq down 8, S&P's up 5.5, gold contract up down $3, trading at $1,267 an ounce. Silver off 3 cents at $15.66 an ounce. Platinum up $20, $9.98 an ounce. Copper flat at $2.28 a pound. Light sweet crude up $2 at $37.98 a barrel. Bonds, the 10-year down 6 ticks. 128.29, 30 off 4 ticks, 162.04. And King Dollar down 238 ticks at 97.10. The euro up 10 at 110, and the yen is trading at 113.41. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Okay. So we close out at $200.59. This baby wants to run up to this $203.87. Bottom line, Friday had some volume. Today we actually backed down with lighter volume. We got to a low today of 199.25. Had 88 million shares traded. Friday we had 129 million shares traded. This baby wants to get up into that gap. We go over and we take a look at the NDX 100, the 3 Qs. What do you have with the 3 Qs? Same type of setup in the 3 Qs. We closed down at 65 cents. We're trading at $105.02. Now, the Qs, folks, haven't made it to the benchmark, the first benchmark. The first benchmark is the December 18th swing low. That's $109.83. That's quite a way from where we are. I do expect you're going to get up there, and in fact, the Qs, which is going to be really wild, can actually get to 111.84. That's going to be a heck of a run if, in fact, that's what happens. Gold. What do we have with gold? Bottom line, folks, gold wants higher price. Yes, it has had higher price in a dramatic way, no doubt. We had a price spread out here today of 1257.40 was the low, 1274 was the high. We closed out at 1267. You've done 208,000 contracts. You're pushing highs and you're pushing them on volume. You know, bottom line is that we're over the first expansion top side, which was the February 11th high, which is 1263. You're over that number, and you have some juice behind the move. Silver. What do we have with silver? Silver needs more strength, needs more buyers. Silver is trying to build some cause to get up into the October of 2015 swing high. That's $16.24. Right now we're trading at $15.67. Had a decent day Friday, as well all the commodities did. Bottom line, we'll see how it attacks the $16 level. Right now you're at $15.66. Bonds. What do we have with bonds? Well, if we take a look at the notes first, we'll take a look at the 10-year note. The note is going to need more volume in order to get to lower price. Price didn't hold out here today. Down 5 ticks, no big deal. 820,000 contracts. What I do expect you're going to see is that we're going to try to go down and we're going to test the high of the 20th of January. That's 128.21. Now, that's only 7-8 ticks down from where we are. If we go over and we take a look at the 30-year, what you're going to see with the 30-year actually came down, rejected lower price out here today. We got down to a price point of 161.22. We closed out at 162.05, and we did 160,000 contracts. So the 30-year is really saying that, you know, more than likely we're going to have some kind of a bounce in bonds. Now, this is where the divergence comes in. When markets are trading higher, you know, the S&P still wants higher price, my take. Dow wants higher price. It's a counter-trend bounce. When you see that happen, bonds go to lower price. So the tricky part of this market right now is what bonds want to do, because if bonds, bottom line, want to go topside now, what that is saying is that the market is getting ready to flip around the other side and go back downtown. So that's the number you want to keep an eye on. Keep an eye on those bonds in a big way. King Dollar. What do we have at King Dollar? Bottom line, King Dollar can't handle higher price. King Dollar down 238 ticks today. And it wasn't today that was basically giving the information out about King Dollar, folks. What happened on Friday, King Dollar went from 98 down to 97. Had a huge expansion of volume. We did 33,000 contracts. That's 33,000 contracts after having made a high at the beginning of last week with 19,000. That 19,000 was going into 60,000 contracts on February 3rd. So bottom line, what do you expect there? I do expect you're going to see good old King Dollar moving down to lower price. We go over to the oil market. Oil market on fire out here, no doubt. Oil market right now, it was up $2.11 today. Huge volume. We did 628,000 contracts. Oil looks to me like, number one, you're going to go up to the, well, $40 is easy. It's right next to it, $40. This run probably will take you to 43.51. That's a big number. We come off those lows. The low in this contract thus far is $28. That'd be really wild if we actually get up there, because you get up to that price point. What's that? $29 up to 45. Yeah, that's a big move. There's no two ways about that. What are you talking? $16 move. Our phone number is 877-927-6648. Shake Shack. Shake Shack just come out with numbers. Shake Shack closed at $42.23. That's trading at $38.90. Let's see what they have to say. Their revenue is $51 million. The same store sales are up 11%. Earnings per share adjusted is looks like it's 8 cents. URBM, let's see, well, what else we have out here. Urban Outfitters closed at $28.16. That just come out with numbers. That's trading at $29.90. Numbers on Urban Outfitters go like this. Urban Outfitters, their net sales was $1 billion. The estimate was 56 cents. They come in with 61 cents. And these are Urban Outfitters in particular. This is an equity that you talk about coming down. This went from $47. We take a look at it in March of 2015. Gets down to $19. Now it's going to crawl its way back. Yeah, this can get up to 33. The high volume swing low on this, by the way, is $33.33. That was established on May of 2015. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow finished up 67. NASDAQ down 8. S&P's up 4.5. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finish up 67. You have the NASDAQ down 8. S&Ps are up 375. And, you want to see something that's pretty wild, folks, okay? This is just pretty amazing, actually. And I shouldn't be amazed by it because this happens over and over and over again, and the bottom line is that nothing ever happens about it. Okay, so today, coming across the tape, Wells Fargo sued by the SEC over bond sale for Curt Schilling. I remember when this was coming down, I really didn't remember like the type of money that we're talking here, though. This is like pretty sick. Listen to this. Wells Fargo and a few folks up in Rhode Island, this is really sad, I think, because I don't know if you guys are on the hook for this or not. Wells Fargo and the Rhode Island government agency were sued by the U.S. regulator today for allegedly misleading investors about how much money a company led by the former Boston Red Sox pitcher Curt Schilling needed to develop a video game. It blows my mind he got this much money for a video game. But anyway, here we go. After being hired to find financing for Schilling's 38 Studios LLC, Wells Fargo's failed to disclose that the $50 million raised from a bond offering was at least $25 million short of what the company needed to bring the game to market, the Securities and Exchange Commission said in a statement Monday. The Rhode Island Economic Development Corporation also knew that the bond sale wouldn't raise enough money for Schilling's company, the SEC said. Municipal issuers and underwriters must provide investors with clear-eyed view of the risk involved in the economic development project being financed through bond offerings. Andrew Chesney, head of the SEC Enforcement Division, said in the statement. In 2010, Schilling's company was developing a multiplayer online game that it estimated would need at least $75 million to complete, according to the SEC. When 38 studios couldn't obtain additional financing following the bond sale, it failed to produce the game and defaulted on the loan. Rhode Island Commerce Corporation, formerly known as the Rhode Island Economic Development Corporation, sold the federally taxed municipal bonds to induce the former Red Sox pitcher to move his startup video game company from Massachusetts to Providence. The state expected it would create hundreds of jobs. Wells Fargo disputes the SEC allegations in connection with the placement of these municipal bonds. Company spokesman Mark Fork said in an email, "We will respond to the specific allegations in the complaint." The Rhode Island Commerce Department had no comment. While the Commerce Department raised $75 million, so check this out, this is pretty wild. While the Commerce Department raised $75 million from the sale, $25 million was used to pay the offering expenses. This is how much money they make in these things. This is sick. And to set up a reserve fund and the capitalized interest fund, the SEC said. 38 studios declared bankruptcy in 2012, with the taxpayers responsible for repaying the money. The majority of the securities don't come due until 2020, meaning the state is on the hook to pay interest until then. This is pretty sick. Keith Stokes, who was previously the Rhode Island's agency's highest-ranking employee, agreed to pay a $25,000 fine for allegedly aiding and abetting the fraud. James Soule, the former deputy director of the state agency, also agreed to pay $25,000. In settling the SEC claims, neither Stokes nor Soule admitted wrongdoing. So check it out, folks. This is pretty cool. You can do an offering for $50 million. If you're a politician, you can pay a $25,000 fine, and you're not guilty. Now, if you wonder why people are flipped out, it's a non-stop deal. And it looks like reading this that the folks in Rhode Island are on the hook. Now, on the next break, I'm going to pull up how many people are in Rhode Island, because we can divide that by 50 million by the interest payment, okay? It's pretty sick. It's like so far over the top, it's unbelievable, actually. Our phone number is 877-927-6648. Thank God he went to Rhode Island versus Massachusetts. Sorry, folks in Rhode Island, but that is so far over the top. And the kicker, so the fraud inside that, folks, what the allegation, the fraud inside that is that they raised $75 million, but the original paper said that the company, 38 Studios, needed $75 million to get the game out the door, not the $50 million they got because they needed an additional. That $25 million got put off to the side, evidently to pay interest for a long period of time. So bottom line, you can see what the mess, and it's a huge mess, no doubt. Let's go over and we take a look at how these markets are set up right now. So if we go into the diamonds first, we take a look at the diamonds, what you're going to see, diamonds finished at a higher high. You're up 60 cents. The benchmark on the diamonds from the December 18th level, $170.89. You went to $170.93 today. What does that set up? That sets up $173.97. You know, that's where I suspect, we're going to go. Now, what the diamonds absolutely have is that these things have gone up on air, okay? I mean air. It's pretty amazing, actually. The diamonds, last time we had any volume in the diamonds, so picture this. You're going into a downdraft that was created with 14 million shares, 8 million shares, 15 million. The last 5 days we've done 3.9 million, 3 million, 2.9 million, 3.5 million, and 3.2. So bottom line is that I do expect we're going to get into that gap, but I expect that's going to be the flip around at that particular point. We go into the small caps, the IWM. We take a look at the IWM. Now the IWM has some juice. This is pretty cool, man. Okay, so the IWM. Friday we did 38 million. Today we did 36. What's that all about? That's all about the commodity run, folks. Many of the commodity oil, metal equities are small caps. That's what that's about. The IWM, the benchmark on that was $110.28. Thus far, we've reached 108.99. I expect you're going to not only not get that, you're going to get up to the 112.51 area. The Qs, we already said in the Qs, what's going to be intriguing with the Qs is that it's going to be like what equity can bring the Qs over the swing point of $105.79. Because the Qs are 4 points. Actually, almost 5 points away from the first benchmark, which is the December 18th level. That's a big number. And we'll see where that shakes out. What we did have intraday out here today is that the first downdraft inside the NQs, it was Facebook that was taking it down. Facebook had traded from 108 and got down into 104.72. That was pretty fast and that was pretty furious as it came down into that level. Apple looks to me like it may be the one that could probably take the NQs up. The reason being is that the benchmark on Apple is the low of the 18th. That's $105.81. That would be a normal counter trend bouncing, something that could go lower. Apple had had good volume on Friday. We went up Friday with 46 million shares. You back down today with 35. It looks to me like you get a run like that in Apple, that'd put a little juice inside that NDX 100. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials closed up 67. Nasdaq down 8. S&P's up 4. We're going to be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow finished up 67. NASDAQ was down 8. S&Ps are up 4. This gets intriguing. You know, we were talking about the 10-year note and a 30-year bond a little bit earlier, folks. So PIMCO, this is a press release. Keep that in mind. This is a press release. PIMCO tells traders it's time to cut treasuries for riskier debt. Pacific Investment Management says investors should move out of government securities and into corporate credit as treasuries weather the longest stretch of losses since December. It's been like 3 days, folks, okay? But yeah, they're down, but believe me, last Friday they came down with volume, but other than that, they really haven't come down that much. With sovereign bonds in Japan and Germany offer negative yields, the equity valuation stretch, PIMCO says high-quality company debt, junk bonds, and bank loans offer better risk-adjusted alternatives. PIMCO's belief that the U.S. economy will avoid recession this year bolsters our view that it's time to move into credit. The chief investment officer at PIMCO in Newport Beach wrote in a note, credit, in our opinion, is the sweet spot intermediate zone between lower risk sovereign assets, which tend to outperform, leading into a recession, and higher risk assets such as equities. It'll be interesting to see how that shakes out. There's no doubt today, as I said a little bit earlier in the hour, that it was intriguing that the bond market couldn't catch a bid as our markets did climb into higher price. Some of the higher volume stocks out here today, and this was a low volume market, folks, is that you had Bank of America down, that was down a penny. Chesapeake Energy was up 15 cents. Freeport McMoRan was up 12 cents. You had Microsoft down $1. Apple was off $1.16. Facebook is the one that took a hit out here today. That was down $2.66. Inside some of the Dow stocks, it was the oils that were moving things and moving them pretty quickly on the way up. You had Oxy was up 63 cents. We had GM up 22. Big Mac was down 3. You had Procter & Gamble down 34. Amazon, if we go over and take a look at Amazon for a second, Amazon got into lower price, had a slight expansion of volume. You know, off the lows here, Amazon on the 8th of February was at $475. This thing moves like $100 like nothing. So it went from $475, it hit $573 today. You know, and it looks like, guess what? You know, you pull back, you had a slight expansion of volume, but it looks like Amazon also wants to make this run to somewhere about $597. If we go over to the IBB on these counter trend routes, IBB up $6.63 today. And this also, you know, this is an equity that got killed. It came down just the last 2 months from $343 down to $240. You know, that being said, you know, bottom line is that it got up into its swing points today with some decent volume. You know, we're at 269. Last swing up here had 2 million shares. We did 2 million shares. What does that set up? That sets up, this actually can go to 285. And 285 is the downdraft from the 28th of September. We put this on a monthly basis, and let's see what this lays out on a monthly. Yeah, same setup in a monthly. On a monthly, you know, what's intriguing here, the IBB is trading where it was trading in June of 2014. And it hit a high already of 385, comes off that high of 385 and gets down to 240. Now you get a counter trend bounce going topside. What I do expect you're going to see is that, oh, 1 second. We had a question about Las Vegas Sands. So Las Vegas Sands, folks, is trading at, was down 97 cents, $50.83. Now, I don't know what the ex-dividend date of this is. Because what the question is that I've been in and out of Las Vegas Sands since $40.83. That's a beautiful thing. It's up $10. It's at its high, and on March 18th, there's a dividend. What happens is that there's a payment date and an ex-dividend date. And I just can't find this quick enough. You want to find out what the ex-dividend date is. That's what you want to find out. But let me just look at this on a technical basis. Yeah, on a technical basis, I'd stay right there. You know, this is, you know, you hit a high Friday at 53.25. This isn't done either. We did 36 million shares, and you hit a price point of 53. Yeah, this could run to 57. You know, 57 is game. If we go over and we take a look at the platinum market, so what you did have happen out here today is that gold was flat. Platinum gained $20 on it. You know, we're talking about that correlation, you know, for quite a while, meaning that it's very unusual when platinum is less expensive than gold. Now, this phenomenon has been on for almost a couple years now, a year and a half at least. What we had out here today is that platinum did go up $19.30. It's traded at $9.98. If we take a look at the PPLT, because I believe that's what one of the Tigers own out here, this is what you have. Right now, you're trading at 96.39. Friday we did 85,000. Today you did 100,000. You're going to 136. No, this is game for 98 right now. More than like, yeah, this is going to go. It looks to me like the PPLT can run up to this 105, 105.55. That's where it looks like it wants to run to. You know, the bottom line is that it's off the lows. And to, thanks, Mike. So if we go back to LVS, the ex-dividend date is March 18th. So bottom line is that you have to basically hold it into that point. And it looks like it's quite a dividend, too. So that's a 5.67% dividend at this price level. It's not bad. It's not a bad, well, it's a great dividend, actually, in a market that when you take a look at the interest rate structure, we're still at an interest rate structure of a 1.9 on the 10-year. Let's go to Dell in Texas. Hey, Dell, what's going on?
Hey, Tom.
How you doing, man?
Great.
Thanks for calling. Thanks for holding. Appreciate it.
I love your show. I just stumbled upon it probably, I don't know, maybe a month ago.
And how'd you find us?
I found you on YouTube.
YouTube. That's a beautiful thing. Well, we appreciate you growling and prowling with us. Welcome to the Tiger family, man.
Wow.
I like it. Totally. What are we going to look at?
Okay, so I bought, this is not, I want to look at CCJ.
Okay.
Amoco, Charles James.
Yep. That's it. Go ahead.
Just to back up a moment, you talked about Bell breaking out and some of the commodities and
yes.
breaking out. And I got into that one, and I sold too early. It took off after I sold, but I made a little money. And so now I'm looking at this one's kind of lagging. Some of the energy stocks and commodities breaking out, as you pointed out. And so I took a close look at this one because my understanding is that they're the largest uranium producer in the world, and on top of that, they have the cheapest cost for production.
They sure are, and it's the mine, folks, that they have. It's called Cigar. It's the cigar mine, and it's just a monster. You stay right there. But I like this. We own this also. Okay, we own Valley. We still own Valley. We own this too. And this right here, this push today, 3.9 million shares. This is going to be a beauty. You stay right there, Del. We're going to be right back. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Dow's up 67, Nasdaq's down 8, S&P's up 4.5. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We're talking with Del from Texas. We're talking about Kimiko, CCJ. And don't forget, folks, every trading day, Monday, Wednesday, Friday, we have live programming, 8 o'clock in the morning to 5 in the afternoon. Tuesday, Thursday, 7 o'clock in the morning to 6 in the afternoon. All that programming you can get right on your cell phone. Just go to TFNN.com, hit Tiger TV. So when we take a look at this, now, it's really cool, Del, when you push a swing point and you have an expansion of volume like this. We did 3.9 million shares today. Now, the stock only went up 15 cents. So that is saying that, yeah, guess what? Someone's selling at the other side of it. But when you push a swing point like this wants to get up and over the swing point. And the swing point that, you know, basically we're talking about, it's over it by a few pennies right now, like 9 cents. You want to get away from it, though, like about 10 cents. You get away from this swing point, meaning we get about $12.75, you'll see this thing up at the $14.52. You there?
Sounds good.
Oh,
yes, that sounds great. I'm in it right now, and I've been patiently waiting. One thing I'm learning from you is about these swing points and the volume, and I noticed the high volume today, so I thought I'd call in because I wasn't quite sure what that meant because we didn't get up through the area that I was hoping we would today.
Right. Now, this is cool, what you just said, because many times, folks, okay, check this out. When I was first doing this, right, it was always, and I'm going back 20 years ago now, it's like, you know, meaning looking at the volume, I'm saying to myself, you know, what is that? Because many times, you know, most people could think that, okay, that's distribution, because it almost makes no sense, folks, that you had this huge expansion of volume, but yet you're only up 15 cents. You know, it's like, okay, so someone's on the other side. But what I've found is that when you're pushing a swing point with volume, that's an institution that's in there buying. In fact, let's go, watch this. We'll do this. I'll just pull up the block trades. Yeah. Okay, so watch when we pull up the block trades. So we've done 3.9 million shares. And if you happen to be watching Tiger TV, what you're going to see is that 57,000, 36,000, 28,000, 20, 19, 16, 15. There's some good buying in here. There's a slew of 10,000 at a time. You know, and a $12 stock, not that that's a huge fortune, but it's still good money, man.
Sounds good. Thanks for taking the call.
Okay, man. Have a great one. Have a safe one. Welcome to Tiger Film Me again. It's a beautiful thing. YouTube, see that? Digital is where it's at, folks. It's pretty amazing. And don't forget, not only that we do all the live programming, all of it is archived also. So you can get us 24 hours a day. When we were just talking about Valley looks like they're going to do a deal. This will be interesting to see how this shakes out. So they just signed an agreement. Let's see. Valley, the biggest iron ore producer, may take a stake in billionaire Andrew Fortescue Metals Group and form a joint venture under initial accord. The agreement would offer Valley the option to buy a minority stake and is aimed at creating a new iron ore blending joint venture for customers in China, the top consumer. You know what's really wild, folks, is that picture, last night, iron ore went up 19%. So it's at $63 a ton, I believe, right now. You know, and as I said a little bit earlier, iron ore, folks, an iron ore mine, if you Google it, you'll see in Australia, these things are just like big sand pits. So iron ore just comes out. But that's one of the main ingredients for steel. The thing that's really wild, and this is where markets are counterintuitive. You know, bottom line is it's not like numbers came out in China last night that were great. They weren't, okay? But guess what? Iron ore went. If we go look at U.S. Steel, you see the steel companies actually start moving last week. And what did happen last week is that iron ore went up 8 or 9% one day last week. That's what got the steel companies going. So U.S. Steel has just gone from $7.22 up to $14. It did that in all of 10 days. So the move in the equities was actually before the monster move in iron ore itself. And if we go back over to Valley, if you want to see how stocks can get destroyed, you know, this equity here, if we pull this back, what you're going to see, put it on a 15-year basis, and what you're going to see is that it was a $42 stock in 2008. By the end of 2008, it was an $8 stock. It did a nice move up to $36 in 2011, and then guess what? It comes all the way down to $2.14. Now, if you got the gold report, if you know we happen to own this. Let me just show you why, though, because what you have is this: is that the last time down, and this is what's going to be so wild about how the counter trend bounce on this can go so high. In 2008, your high volume swing low was $9.72. Okay? That being said, what do? Well, we break down. And when you break down, bottom line, it broke that level and it broke it with lighter volume. But we didn't bite then. We didn't bite again. We didn't bite again. What we did is that we waited for a sign of strength to come in. And the first sign of strength came in at the beginning of February. And as that sign of strength came in, I'll show it to you. What you had is that you had a little. First off, you tested the low, and there was no more sellers at the lows. Okay. Then what did you have? Well, it was a nice sign of strength that came in on February 4th. You know, we had hit a low, and you had 27 million shares. All of a sudden, you had the wide price spread, accelerated volume. We did 44 million shares. So you hit lows with 27 million, you go up with 44, but here's the kicker. Then what do? You wait for the pullback. On the pullback, you come in with 18 million shares, and what? We didn't bite then because I wanted an additional sign of strength. You got the additional sign of strength. You went from 238 with 18 million. Then you get a bigger expansion, wider price spread. You do 40 million shares. You get to 288, and guess what? Then we backed all the way down to 269 with 25 million. And the 25 million you had to back against the wall because that level, you were $2.69. You were coming into the $2.77, which is 44 million, and that's when it rejected price. So you had two separate signs of strength. It came back twice with lighter volume. You bit the second time. That's how that, and you know what they say sometimes, it's better getting lucky than, bottom line is that it's a nice expansion. I just wanted to bring you through that. And then, of course, the stock just went 5 days from 269 up to 480, 489. My take is that we're going to go a lot higher, though, because that's still nothing in the context. So picture, that's the technical setup. If you want to see the fundamental setup in this is really sick, folks. So the fundamental setup goes like this. This equity takes in $90 billion. And that's $90 billion. That number, $90 billion, was out there because that's before the 19% advance inside iron ore. If iron ore ever stays up 19%, which I doubt it will, bottom line, you can imagine what that does to a bottom line. It basically, to a bottom line, it just brings in so much power. It's amazing. Because even at that level, oh, and by the way, the stock pays a 4% dividend too. So on top of all of that, you got a dividend. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow finished up 67. NASDAQ down 8. S&P's up 4. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. We go and take a look at the financials, the XLF. Now, the financials, folks, are trading out here at 22.27. The financials also pull back today, slightly lighter volume. Now, the financials are some of the weakest equities inside the marketplace right now. The benchmark on the financials would be, the XLF would be $23.30. That's another buck up from where we are. So it's going to be wild watching this whole thing shake out to see if, in fact, they can get any juice going. On Friday, you had 57 million shares, and you're going at the 67 million. If we take a look at this on a weekly basis, bottom line is that it wasn't as bad as on a daily, because on a weekly we did 330 million into 379. So that even looks like, yeah, it's sticking out like a sore thumb. This $23.24 wants to get tested. This is going to be a whole patience game. If we go over and we take a look at the trend to see where the trend's laying out. So what happens is this. So what the ARMS is, folks, it's the short-term trading index. When you get to highs, and this little baby consistently is, whether it's in the 70s or 60s, what that is saying is that all of us not only are buying, but you're buying the exact same stock. So when the trend, a one-day ARMS, is at 1, that means that inside the New York Stock Exchange, people are buying all the equities, and it's a balanced area. When you get below 1, it is saying that certain equities are getting all the buying. And in this case here, this is what we've had. Today was a 0.82, which is not bad. Friday was 0.70, Thursday 0.73, Wednesday a 0.42. Now that's where that gets intriguing. That also, the way this is set up right now, if we take a 5-day, that's not saying that we're at a high yet. Because when this gets to a high, those numbers will come in at about 3. If you do a 5-day ARMS, it'd be about 3.2. That's when you get some euphoria inside the marketplace. If we go look at the tick index, because what you'd want to do is that you want to put that together with the tick index, and what you have inside the tick index right now is that down tick today was 1,005, up tick was 1152. That also is not a big deal. What you'll end up seeing as we come into a high is you'll see a monster high tick reading come in, like probably a plus 13, 14, well, plus 14 to 1500. When you get both the arms going dramatically lower, the tick going dramatically higher, and then what else are you looking for? Well, what you're looking for is this. You're looking for the same day or the following day, you'd be looking for a rejection of higher price with lighter volume. And I suspect it's going to happen at one of these swing points. That's where it's going to be. And the way this market has been trading, it's going to be really subtle. It's going to be really subtle. What I'd also add into the deal, folks, is watching the 10-year. Because the 10-year will turn on this market going downtown. I suspect what you're going to have is that we're getting real close, too. You know, right now you're at 128.30. The first benchmark that we had, we're short these bonds right now. But the 128.21 is it's almost like, okay, that's where that can basically turn. So melt it together and trade in harmony. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right back here tomorrow. Actually, tomorrow morning. Come visit us. Go get them, folks.